Hello there, traders. It's Monday, November 2nd, 2020, and your trade for today is in. It's a viewer suggested trade because that's what we do on Mondays when I get them. So I want to first off give a big thanks and shout out to Michael C. I don't want to use his full name in case he's not cool with that being shared. He sent me a nice email and, it was very well thought out. He says he's new to options, but I don't know. Based on the things he was talking about, he brought up something. I don't know how to pronounce the gentleman or this person's name, but I Googled it, and the idea was this concept of anti-fragility. And so I don't know. Have you heard of anti-fragility before? So I Googled it and read a neat article. I'm going to link it in the description below, the one that I found. If you know of better things to describe this other than the blog post that I found, feel free to share that in the comments as well. But the idea of anti-fragility what I learned was, think of the word fragile, right? And then think if you can think of the word that's the opposite of fragile. Really, there isn't a word you might come up with, tough, right? Or something like that. But, when you think of tough and you think of it something that's ability to weather the storm, is that it usually is like, all right, I made it through the storm, I didn't get damaged, right? But what about the things that actually get better from having been through a storm, right? Not that I can think of that, but the idea that there are things in this world, right, that do get better when randomness occurs, right? So our viewer suggested trade tries to take advantage of that idea and that making a trade that benefits from an increase in volatility in a storm, right? So with that, they suggested taking a look at using an index and a long strangle. So we're going to dip our toes into these waters today. They wanted my thoughts on this as well. So I'm going to build out a trade based on the viewer suggestion, and then I'm going to offer my alternative. And I'd be curious to hear your thoughts as to what you feel about this trade. So with that said, let's hop on into our ThinkOrSwim platform so we can begin, doing a little bit of studying today. But first, allow me to introduce myself. My name is Neil, and this is Option Theory, and I want to thank you so much for joining us. Here, we build out a portfolio of simulated trades so that we can prove to ourselves that our theories are, valid, right? That our mechanics are there, that our skills are there. And if we do this long enough and successfully enough, I think some of us might feel comfortable to actually eventually place real trades if you're not already doing so. So if you're new here, head on down to that description, find the link to the article I was talking about. But more importantly, probably, is to head on down to that Cherry Bomb link so you can go over to Tasty Trade, because 4 days a week we build out trades using the cherry bombs that come from Tasty Trade. You want to sign up for the email with them. It's not coming from me. All right, too much to do. I don't want to plug myself anymore. So let's take a look at what we have on screen here. Just to have this drawer pulled out by default right now. So you can see that we're seeing some green now, right? We're seeing, the indices here. We've got the Dow Jones, the Russell, NASDAQ. They're all, if we averaged it, let's call it up 1% or more, maybe. But gold's also up. Dang you, oil, right? Silver's up. So check your trades. Maybe you have some positions in there. But with that said, let's close that drawer and take a look at what we're being suggested to do, or an idea, just a trade idea, right? And that's why we do this here, because we can take a look and see if it's something we want to do. And even if we don't want to do it, test it, right? All right, so over here, we can see that the SPY has come down and it's hit its lower band here. Maybe that's a bullish signal. This one down here, almost crossing this line here, would be a bullish signal. I'm not seeing anything bullish here. So that's the technical analysis. That's as far as I go into technical analysis. Some of you might have more. I'd love to hear your thoughts on what you do. So with that, we know that tomorrow in the US there's an election, and there's likely to be some unrest no matter who wins. That's if there even is a winner, or that someone concedes. Which has been the tradition up until probably this year. All right, so anyway, I don't want to get political, but just know that we're headed towards probably a pop in volatility. So even though, looking at the VIX, I think it's going down a little bit. Yep. All right. That's probably because the market is coming up. Not sure why that is, but here we go. So I'm going to go to this Analyze tab now. I'm going to hit Add Simulated Trade, and I'm going to be in the November monthly expirations here with 18 days left to expiration. I'm curious, would you select a different expiration? Would you just go with this guy here and take a very short, because obviously less days, it'll cost you less. So maybe we'll take a look at both, right? So what I have actually already built out here is, that's not what I want to be. I don't want to be in December. I'd like to look at this November one here. I already have built out right here a straddle, right? A long straddle. Why? Because that gives you the best probabilities. The suggestion was a strangle, and we'll definitely take a look at that. But I wanted to show you, so here we're buying the 330 because that's where we are, bid ask, we're at the 330, buying the at the money 330 call and buying the at the money 330 put for a debit of $21.79. So that's how much we could lose if after 18 days SPY has not moved up or down, right? So I'm not, that's a lot more than I normally risk in a trade. But like I said, we're going to explore this, look at the mechanics, see if we like this idea. So I'm going to head over to this risk profile here and make sure that the date here, November 21st, matches the date that you see here. And we can see this expected move. And to me, the majority of that expected move is covered by the loss area at expiration, right? Of course, if in the next few days, it actually moves into this area here, we can still make money, right? But time is going to work against us in this trade, especially if it doesn't move. So if we add up the probability the percentages to the right, I had set my slices to break even, by the way. I did that over here, set slices, break even at expiration. And so we're looking at a 22, 24, let's call that a 46%, right? But really, we're really close to 50-50 on this one at expiration. Being on, you know, we could either be in the loss zone or we could be on either side of this in a profit zone. I'm not a giant fan of those probabilities tied with this amount of loss, right? So can we change this? Yes, absolutely. So I'm going to close this trade out here. I'm going to delete this trade, if you would. Go back to Add Simulated Trade, and let's spread this out a little bit, right? You know what? Before we do that, let's close this monthly expiration and just head to see what it would cost us, our maximum loss, if we just take a 2-day trade. And we'll do the same thing, the 330, right? So I'm going to hit the ask for the put at 330, hold down the control key, and hit the ask for the 330 call. And we've got our straddle here. And so now we're, you know, half of that cost for only 2 days. Let's take a look at our risk profile on this one. Set the date to the proper date. That would be the 5th. And going the wrong way. There we are. And what are our probabilities on this one? So, yeah, that would not be good. Right? So we're looking at a, let's call it 30, but it's not. Let's call it 30. Yeah, I guess 30. 30% probability of being on either side of this. Yeah, not something I'm looking for. That's why I figured the November one is a little better. It is November monthlies. All right, so let's hit this guy here. Now, we know what the straddle would look like. The suggestion was to try a strangle. So let's look at that guy here, right? So let's go $10. Let's go over here. I'm going to hit the ask to buy the 320 put. I'm going to scroll down and buy the 340 call. Control key, click on that bid here. Now we're looking at a, did I mess that up? I sold that one, didn't I? Yeah. Oops. Ask. You got to do the ask. All right, let's reverse that. Let's click on this call for the 340. Come down here to the 320. And hold down that control key and click on the ask. All right, now we got the strangle. We're looking at a $10 wide as far as, you know, plus or minus $10. We're looking at a $1,300 debit on this one, so that's how much we could lose. Let's look at our probabilities on this one. So make sure our date is set to the proper date of the 21st. And let's set our price slices to break even. And so we're obviously going to be less than the lower probability, right? Because we're widening this out so that we pay less, but we're, relatively close to 50-50. So if I had to choose between the straddle or the strangle, I would pick this one. This is totally an option that you can go for. And, I would say this would be the one that I would pick if I was going to go with this one. But now I want to talk a little bit about what I think I understand and what jives with me as far as trading options. I tend to espouse the ideas of that Tasty Trade promotes of being the house, not the person that places the bet, right? There's always a give and take with options or with investing, right? If you want to take something, you have to give something in return. If you want to take the ability to have unlimited profits, right, you have to give up the probability of actually making those. So when you're buying options, you'll notice that when I say they, I mean Tasty Trade, they don't ever just buy options. They always sell options to finance, right, if you would, the purchase of those options, to reduce that cost, to improve their probability. So you'll see them do things like long verticals, right? Why? Because when you cap your maximum profit, you increase your probabilities. So knowing that, right, I tend to find myself, I'd rather be the person that is the house. If you think of a slot machine, what is the casino doing? They're willing to possibly have to pay out big numbers to take the larger statistical probability that, yes, they're collecting 25 cents each time you put a coin in there and pull the arm, right? There's a great chance they're keeping those 25 cents every time you put those in there, right? And that adds up. And it's a machine for them, right? And I think that's the idea of what we're doing here is testing this machine out, right? So I want to offer you another alternative, and I've already built it out in Tastyworks, but I'm going to come back and do a follow-up how to build it in ThinkOrSwim as well here. So I'm going to pull up Tastyworks here. And so this would be the alternative. This is what I do intend to try, just so I can, hey, look, I took the viewer suggestion. I don't know that I want to place that trade in my portfolio, but I wanted to offer my alternative. So here it is. So what we're looking at here is a butterfly. In this case, we're going to be buying two 330s and puts, right? And then we're going to sell a 340 and sell a 320. And so in this case, what we're looking at here, instead of being in the 50s, we're looking at a probability of 77% in this one, and a probability, a P50 of 75%, according to Tastyworks. I don't know how these numbers might change as the market opens. I like those probabilities a little better, right? Still, we could lose. But look, now we're only possibly losing $880 should this not move for us by expiration. Right? And, I'd rather have those yes, we've limited our upside, no doubt about it, right? Here, instead of having unlimited profitability, I could make $120 at expiration should it go this way, right? So, you know what? I'm willing to put myself out into areas I wouldn't normally go. This butterfly, I don't think is what we would call a tasty trade. So I feel like hopefully I'm doing a little bit of what Mike suggested here. So I'm going to go back now and hit the ThinkOrSwim up and try to build this same trade out over here. So I'm going to delete this guy, add simulated trade. And what we're going to do here, come to the at the money. I'm going to click on this buy for the 330. I'm going to increase my quantity to 2. I want to buy 2 of those. I'm going to scroll up. We're going to be doing all puts, right? I'm going to sell the 320. Hang on a second. I'm going to hold down the control key and sell the 320, right? And then I'm going to come on up here, hold down the control key and click on the 340. And so now I have my butterfly. I've got my 2 that I'm buying, the 2 that I'm selling on either side, $10 wide in this case. So, I don't trust that's a credit. But okay, what I'm going to do is I'm going to right click this trade, click confirm and send. And I'm going to hit send. You know what? I didn't, because I should hit the risk profile just to show you that it's actually the same here. I didn't do that yet. Look at me, I'm all over the place. All right, now we're looking according to ThinkOrSwim numbers here, right? We're looking at a 23, let's round it, 23% chance of it ending up in our loss zone, right? I like those probabilities better, and I will take that, hopefully, to the bank. All right, let me know in the comments. Do you like this trade? Which trade is the trade that you feel like is the one that you'd put in your simulated trading portfolio? I'm going to hit send. That's going to put in my working orders. And I really look forward to hearing from any or all of you in the comments. And please send trade ideas, even if you don't have a full-on idea like Mike did. If you just have an underlying, a stock symbol, whatever you want to send me, that'd be great. I like to have these things for Mondays. So if you've made it this far into the video, I hope you can see me giving you a thumbs up. You deserve it. I really appreciate it. It helps me so much. If you feel that I have earned a thumbs up, would you mind hitting me that thumbs up button? And if you haven't subscribed yet, take your time. I'm going to be here. I hope you enjoy these. When you do decide to subscribe, feel free to ring that bell and so that you'll be notified when our videos come out. Until I see you in tomorrow's cherry bomb trade, best wishes. Well, I don't think there's going to be a cherry bomb. I don't think the markets are open tomorrow. If the markets aren't open tomorrow, then there won't be a cherry bomb. All right, everybody. Happy trading.